Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again in the gold market. So in general, here we do not see something really surprising. The market accurately falls to the scenario that we discussed recently. Especially currently you can see this dynamics supported by the changes on the interest rates. So you can see that, as we said, the interest rates, so also you can see some stronger upward action here stand. And that making pressure on the gold market as well. So currently investors are just waiting for the Fed and this upward action on interest rates. It seems that investors still would like to hear something about inflation from the Jerome Powell. So, and that explains some rising. So maybe the Jerome Powell will change some rhetoric, give some hints on this rising on inflation, something of that sort that could support the interest rates in the United States dollar and could make the pressure on the gold market. But currently, well, chances that Fed will keep everything the same are really significant, and well, I think that we should not overestimate the possible results of this meeting today, and that's some mostly emotional factors that we see currently, some speculators' games. So we should keep an eye on our trading plan, follow our trading plan. So because the situation could reverse very fast as soon as the market will hear nothing new from Jerome Powell. So it means that on the gold, we're still watching for two moments that we discussed recently. So first of all, depending on the way how you decided to make an action, making trading here, you can see on the daily chart, we said that we need to keep an eye on the MACD line. Here, it's market flirting with that, and by the end of the day, we could get, for instance, the bullish grabber. So if you intend to focus on the grabber, then this is the chart that you need to keep an eye on. Currently, yes, market is dropping, stands below the line, but you understand, based on the Fed statement, everything could change in the blink of an eye, and market could close right back up above the line, forming the grabber, and suggest the taking out of the stop, reaching at least XOP and intraday OP around 805. But potentially, as we said, investors are speaking about breaking on the 1.5 interest rate level and reaching on the 1850 by the gold. This is short-term, more probable target if indeed market remains bullish and keep current scenario with the upward action. Additionally, those who are watching for the levels, take the position and use the grabber only as a control, kind of the pattern or signal, something of that sort. And keep an eye on the same levels that we specified previously. Here's the grabbers working nice and already is completed as market has created the new lows. Price currently slowly is dropping below the 1770 FIB support and is moving to the XOP target. So here's starting the level, an area that we have agreed to keep an eye on for taking the long position. So as we think that market stands bullish, to confirm its bullishness, it has to stay above 1750. Yes, our invalidation point is 1723, these lows, but this is so-called catastrophe lows. So if market breaks this confluence, the chances, in the bullish context, the chances to reestablish upward action drop significantly. So to keep the purity of the bullish context, market has to stay above this area. Besides, this is also the previous top, so retesting of this area, then returning of the cup. This is how the normally bullish market should perform. Any deviation from this scenario is dropping below this area, diminish the bullishness of the overall situation and increase the risk that this context will fail. So that's why for position taking, we consider 1752, 1760 area, or better to say even 1755, 1760, with the stop placement somewhere below the confluence. Of course, if on the first words from the Fed we see the collapse and straight downward action right below right down to the 1720, it means that we should not take any long position. So I will call you to not anticipate the Fed statement personally. It's of course very personal, but I do not like to anticipate the important events such as the non-farm payrolls release, gross domestic product, Fed statements, or something of that sort. I prefer to act when the chip's already on the table. So let's keep watching what will happen. On the hourly chart, once again, we have a few targets. It's important to us. First of all, you can see the hand shoulders that we discussed previously. It seems is working somehow. It's not very, has a good shape, but still, as you can see, recognize the shoulders, head, the sell-off, and the slope of the head. That's also a good sign for this pattern. And it has its own target with this ABCD, 1756. That agrees with the confidence support right here. That's why I said about the 1755. It stands above the confidence slightly. So, that being said, there's two ways to act. First of all, consider if overall action remains gradual as it stands right here. Once market will hit this XOP, you could start thinking about taking the position. If, as I said, we will not get the straight downward breakout, we will gradual, relatively slow action hitting the XOP, some rotating around it, that will be the moment to consider taking the position. In the second scenario, those who are watching and focus on the daily chart, just do nothing, sit on the hands and see where the market will form the bullish grabber by today close. So that's two approaches that we have for trading gold right now.